What is a safe investment during a recession? This is a great question, and it's a very hard question. I'm going to just tell you my story of what I invested in the last downturn. I invested in housing during the last downturn. See, I have a money problem, spending problem. If I have money in my pocket, I spend it. But I've learned to work with that, and whenever I have money in my pocket, I go and buy more real estate. So during the last downturn, as things started falling, no one knew where the bottom was. No one knew what was going to happen. And a lot of people like to sit back now and speculate and say, yeah, I knew this or should have done that. Well, I actually did this. And so it actually took a gut check to do some of the stuff that I'm getting ready to tell you that I've done. I never invested remotely before. But what happened was people were asking me, John, what would you invest in? How would you invest in a time like this? I started investigating different areas of opportunity across the country. Like, what areas are the most depressed, most beat right now? Where is bottom? So I was looking in places like Indianapolis. I was looking in Ohio and Detroit. I ultimately ended up picking the city of Detroit, Michigan, to go in and invest. Here's some of the things that happened along the way. This is me just being really honest about what I did personally to accumulate real estate in the beautiful city of Detroit. I ended up with a $7,700 a month mortgage payment that I had during the downturn. And not only was that a huge payment, but I was way underwater. I mean, hundreds of thousands of dollars underwater. So I started sitting there thinking, and I'm not recommending you run out and do this. I'm just telling you what I did. This is just my story. So what I ended up doing is evaluating that $7,700 a month mortgage payment and what is my credit worth? Would I be willing to sacrifice this credit that I worked so hard on for so many years as being a real estate investor and let this house go in order to accumulate real estate in Detroit? This was my thought process. A house in Detroit at the time was between $4,000 and $5,000. I would spend about $3,000 to $4,000 fixing it, which was equivalent to about what my mortgage payment was. I knew that it would take the bank roughly 3 years to foreclose on me. If I kept up the pace of being able to make those payments, I figured at the end of 3 years, I'd have roughly $36,000 a month coming in residual income by me forgetting about my primary residence payment and focusing in on this other opportunity, and that was housing in Detroit. It was a gamble. Who knows what's going to happen, but I felt like it was worth it to have that many houses free and clear. So I got started. I stopped making the mortgage payment and I started buying houses. Who knew what was going to happen next? This is a disclaimer. I am not telling you what to do. I'm telling you my story and what I did at the bottom of the market during a recession to get ahead. Everybody probably thought I was crazy, and maybe I was crazy, but I got lucky. All right, so the market at some point did rebound and it did take off again. But during that time, it was a touch and go situation where every dollar I could scrape together every single month, I went out and I bought a new residential asset, and then I fixed it up and I'd rented it out. And this we did over and over and over. In fact, we did it so many times, we took the compounding number of not touching that money and we rolled it every single month. And anyways, it allowed us to hit that number a lot quicker. So then what I did is I decided, okay, the market started to take off again, right? Not in a huge way, but it was moving in the right direction. So I wanted now to relocate and redeploy that money in a city that I could actually go and vacation at the same time. So we ended up doing is moving a lot of those assets to Phoenix, Arizona, which was Scottsdale when we first started. We started buying vacation condos in the Scottsdale area, and then we started doing some fix and flips while I still lived in Seattle. So we were riding this market out. We were trying to figure out where bottom was. Again, I'm trying to share with you guys, you kind of have to ride down because it's so hard to figure out what is bottom as far as real estate investing goes. Well, when you could buy $3, $4, $5 grand, how much cheaper is it going to get? I figured I could sell the brick from the house for at least that. So we ended up selling to a REIT and another private equity company. We took all that money and then we redeployed it all in Scottsdale in the Phoenix market. And that was in residential, and we started commercial real estate investing at the time. Still, bottom of the market. We were buying residential for the most part. And as residential was taking off, commercial still was going down. So as it was, we were able to sell at a slightly higher uptick on the residential and still pick up the commercial on the downturn. We were basically letting the residential market do the heavy lifting for us and taking advantage of the depleted office, well, specifically office at that time, and doing executive suites. So buy low, sell high. It's all about what real estate is. It's just like a stock. Buy low, sell high. You do it the opposite, you'll be out of business pretty quick. If this is something that you're finding interesting, do me a favor. Give me a thumbs up on this story. Give me a like. Come on. I'm pouring my guts out over here. You could give me a thumbs up. I'm telling you good stuff. This is all true. So anyways, give me the thumbs up. Let's keep going. When evaluating all of these different assets, the opportunities were so good because banks weren't necessarily lending. So we were having to pay cash for these houses. That or find a hard money lender that would invest with us. For the most part, what we did is when we accumulated all those properties back in Detroit and we started selling them off, we were able to take some of that and deploy it and buy real estate fairly inexpensive. The Phoenix market was 2-bedroom, 1-bath condos for as little as $14,000. Pretty inexpensive. And we were selling the houses in Detroit for $25,000 plus. So that little investment, those started taking off, and we just found another market that was still free falling, and we were able to ride those waves. So understanding market conditions during a recession and what's going down and what's coming up, and be able to sell and exit on some of the upticks and then re-pick up stuff when it's on its down. That's all we did. At the same time, you're probably sitting there thinking, well, what happened to that house that you were living in, John, back in Seattle? Well, I'll tell you what happened. 3 years did come and go, and guess what? One day I walked out and there's someone taking a photo. I knew exactly what they were doing. That was a pre-foreclosure, or the foreclosure notice is starting to go out. That was the bank having them come out, take photos, and getting ready to actually start the process. So I knew stuff was getting real at that point. We had already had all these other assets accumulated by now. So what we ended up doing was we put that thing on the market, and guess what? Right before they foreclosed, we ended up selling for a slight profit, believe it or not. Anyways, appreciate you guys listening to my story today. Do me a favor, subscribe below. I'm going to continue to bring you great content like this. These aren't just stories, they're real stories. They're my stories. I love sharing them with you. And one other thing, as a free gift, not just of that great story, but really as a free gift, if you want to get a strategy session in and figure out what you should personally be doing and how to get going in real estate investing, click on the link below, schedule your call. We're looking forward to meeting with you.